Welcome back to the watch list. Semiconductors really were driving the market. There was a time when the semis were up, the market was up. Semis were down, the market was down. And we've certainly seen some great names run up, but they've since pulled back. And so now the question becomes, what part of this group are winners? Are they all winners? Let's bring our panel in. Michael Robinson, Chief Technology Strategist at Weiss Ratings, and Olivier Blanchard's with us, Research Director at Futurum Group. Thank you both for being with us. I mean, I think there's an idea that semis certainly can lead the market. I just saw an article on Nvidia saying that Nvidia was still a no-brainer when it comes to investing. Michael, what do you think?
Well, Nvidia is one of the great chip companies of all time. It's just been an amazing player. You've got a kind of a bifurcated market, as it were. A lot of this rally in chip stocks that were really heavily focused on the electric vehicle market, you've seen that sort of slow down. Investors aren't as enthusiastic as they were, say, 6 months ago. We have this build out shift in the market for cars. Automotive chips are still going to remain hugely important, and NXP and ON Semiconductor are both players in there. But so that sort of cooled the growth outlook for some of these stocks that were heavily invested in electric vehicles. And we've seen kind of Nvidia in some ways suck some of the oxygen out of the room because it's all been about AI and not as much about automotive. But if we don't have a healthy automotive sector in the United States and globally, we don't have a healthy economy. So for the long haul,
right,
it's a great market to be in with semiconductors.
If you've been following Nvidia for a while, you'd know that the stock has been on an epic run recently. In fact, it has skyrocketed in the last few years as the company established itself as the dominant force in GPUs, accelerated computing, and AI. As you might already know, the market for generative AI is massive, and it's actually expected to become a $1.3 trillion market in just 8 years. It's obvious which company will benefit the most from this explosive growth, and that is the market leader, Nvidia. Many analysts agree that Nvidia has more room to grow even as competition rises from both traditional chip makers and new entrants, because Nvidia has built an ecosystem that is hard to replicate, and this could be just the beginning of Nvidia's dominance as it looks to define the future of computing. That's what Melius research analyst Ben Reitzes wrote in a recent note, so let's take a look at what he had to say. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Our next guest believes the AI spending trend, well, it's going to continue. Matt Bryson, Wedbush Securities Senior Vice President of Equity Research from Hardware, joins us now, has a buy on Nvidia, price target at even 1,000. 60 Minutes does a great job of informing people about things that, about Nvidia perhaps that so many don't know about. Not our audience. They know plenty. So let's forget about that and just talk about last week's news that was more important for our audience, which is namely Alphabet, Microsoft, Meta. Those CapEx numbers were enormous, Matt. What does it mean for Nvidia when you look through those numbers in terms of how much of that spend ends up with that company?
Look, these large data center operators have been spending more and more on AI as a percentage of their CapEx. Now they're telling you they're going to spend more in CapEx and that a lot of that's going to be devoted to AI. NVIDIA's said multiple times that the cloud is more than 50% of their spend. I think if you add social media in there, you're probably talking more than 2/3 of their spend. And so if those large consumers are going to spend more, that's a great thing for NVIDIA.
Yeah, I mean, so how do you model it out? I mean, I can go through, I think of Tesla and what they're going to spend, not to mention even Musk's XAI startup, which is raising billions to basically spend in the data center, so to speak, and on from there. Is the market justified in sort of the current multiple on this stock, and or even should it be higher given the potential it has?
Yeah, NVIDIA from multiple perspective isn't crazy expensive. So the last time we downgraded NVIDIA, it was because it was getting close to 50 times, which you have to go back to Cisco in 2000 at the peak of the internet bubble to have that type of valuation historically for such a large company. Now, from an earnings perspective, if I remember correctly, my multiple is based on a little over 30 times. NVIDIA's traded there lots historically. So I don't think it's expensive. I think rather the question is at some point, do we get a pause in investment because some of the promises of AI haven't shown up yet? I don't think that's happening this year. I don't think it's happening through Blackwell. So we're a year plus out from that being risk, in my view.
In a recent research note, analyst Ben Reitzes of Melius Research offered a positive outlook on Nvidia stock. His note basically said, sometimes a no-brainer is a no-brainer, as he argued that Nvidia is well positioned for significant growth due to the increased spending on AI infrastructure by major cloud computing companies. Reitzes points out that companies like Amazon Meta and Microsoft are rapidly ramping up investments in AI chips for data center projects. If you've been following any of these companies, you'd know that he's absolutely right. Just last year, tech giants Microsoft and Meta each spent $9 billion on Nvidia's AI GPUs, which indicates the great demand for Nvidia's products. Another Magnificent Seven member is also very interested in Nvidia's chips, and that's Tesla. In the company's Q1 earnings call, CEO Elon Musk said that Tesla plans on buying around 50,000 H100 chips from Nvidia this year, and since one chip costs around $40,000, this alone could bring Nvidia an extra $2 billion in revenue. So, cloud providers and AI leaders are eager to secure more Nvidia chips, leading Reitzes to believe that the growth trajectory for Nvidia is compelling given its strategic position in both AI and cloud computing. Still, Reitzes acknowledged that the stock may look expensive now, but he contends that Nvidia warrants a premium given that the company's total addressable market is huge. In fact, Nvidia said in its latest earnings call that the total addressable market for data center chips is expected to grow from $250 billion this year to $500 billion in 5 years. Reitzes presents a firmly bullish case that Nvidia is a standout opportunity and even called its stock a no-brainer investment. But what does that mean for Nvidia stock investors? Let's find out. Hello everyone, and welcome back to Investocracy. Reitzes' bullish sentiment towards Nvidia is reflected in his decision to maintain a buy rating on the company's stock while raising his price target to $1,125, up from $1,000. Let those numbers sink in. We're talking about a potential 30% rise from Nvidia's current perch around $864. So, Reitzes is all in on the Nvidia hike train picking up speed. Of course, investors have to wait until May 22 for Nvidia's earnings to see how it performed for the quarter, but one thing's for sure, Nvidia's earnings will be stellar thanks to all the big tech names still buying its chips. And with the upcoming release of Nvidia's most powerful chips for AI, the Blackwell chips, these companies will likely keep buying more to get their hands on the newest tech, which will help them develop even better AI models. Forget typical AI, these cloud giants are chasing AGI, or artificial general intelligence. We're talking about software that can reason, think creatively, even attain consciousness like a human mind. Extraordinary, right?
And we just heard from Google or Alphabet, so we'll start there with what Sundar Pichai had to say. Rishi, I want to go to you first. I mean, you hear these comments on the earnings call. How does that change your thesis, your way of thinking around this name, and your own kind of rating that you have on it?
Yeah, absolutely. And remember, I cover Microsoft, so I can kind of talk about that and then maybe more broadly on AI. But look, the commentary out of both Google and Microsoft, I think, tells us that there is real demand for AI. And, it's happening kind of at the data and infrastructure layer for right now. But what's really happening is there's actual money being put behind this. It's not just hype. It's not just, people talking about it. There's actual capital being put to work. Look at, Microsoft, where they said about 7% of growth from Azure came from AI. That implies that AI is already a $4 billion ARR business for Microsoft today. And that's not even counting any benefits that we're going to see from Office Copilot. So really, I think this is just speaking to the fact that although it is very early days for generative AI, there is real interest and real capital being put to work with this.
Ted, what do you think? Do you agree that this AI narrative now is back on track and back in favor for investors following these two results?
First of all, thanks for having me, and I do agree with your guest. We are going through really a generational infrastructure build with right now a lot of semiconductors, a lot of hardware, a lot of networking as that Gen AI stack gets built out. So we're seeing these CapEx numbers. If you look at where Google spent this last print, it was $12 billion. Microsoft CapEx was $14 billion. They are spending a ton of money on infrastructure. And what gives them both the advantage is their data center footprint already exists. And their internal expertise in generative AI, they're hitting it from a little bit different tax with Microsoft investing in OpenAI. And Google has a lot of internal Gen AI through DeepMind. So both are juggernauts, and this market's just starting right now on the infrastructure side, and soon will translate into the software layer, probably in 25 on the enterprise side.
AGI would change everything about how we view AI right now, and AI companies like Microsoft and OpenAI are doing everything they can to be able to reach it. However, the computing power required is unprecedented. That's where Nvidia swoops in. Its state-of-the-art GPUs are specially designed to handle the intense parallel processing needs of deep learning models, and as the AI workloads grow ever more complex on the path to AGI, so too will the demand for Nvidia's specialized products. Many analysts and investors alike think that Nvidia's dominance will come to an end as cloud companies like Amazon and Microsoft are now making their own chips, but this is very unlikely because Nvidia's chips are still the best in the market, and these companies still being Nvidia's customers even after they developed their own chips proves that. Also, it might be harder for them to convince their customers to switch to their internally developed AI chips, as most of them would be already used to Nvidia's platforms. Nvidia is particularly entrenched in the inference phase of AI, when models make predictions on new data. Reitzes argues Nvidia will remain the leader for supporting this demanding real-time inference, given its specialized platforms for AI computation. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And we haven't mentioned NVIDIA.
Do you
until
remember
now.
NVIDIA? Do you remember that?
I do. I remember.
Okay, do you remember the piece in 60 Minutes? Was a piece mostly about whether we'd all be taken over by robots?
Yeah, sure.
I will tell you that here's a piece by UBS, and it's talking about dollars, how much they're going to make. Earnings per share to 41 following supply chain. 41. Well, David, this is cheaper stock. It's cheap stock. And they're talking about shipment for Blackwell in December. Now, they think that means there's going to be a product hole. I think Blackwell ships earlier. Now, Blackwell is the big one that makes it so that a lot of people feel they can do video. That's what I want. When people think Blackwell, they should be thinking that you can inject video, and then when you want to do inference, it will be able to do the video for it. And that's a rather remarkable thing. Right now, we're very good at commands, at words. When we get video going, wow.
What does that mean?
Well,
what are you actually saying?
So you want your robot to act like Daniel Craig in Bond. Well, it will watch Daniel Craig and it'll do it.
It'll do it.
It'll do it. And I think that what happens when you see that is, wait a second, how did it do that? Well, it just ingested video. It's no longer just print. I mean, right now it can be Moby Dick in a second, big deal. But when you can put movies in, David, I can project you to be Cary Grant.
Really?
Or John Garfield.
John Garfield is the one that does come up more often.
Right. But I'm just saying that video is the next frontier. And if you can be able to make video and do things, then you can teach robots to do things that we've never believed. Robots will not talk like this. Robots will talk like, hey, how you doing, partner?
As large cloud computing companies increasingly adopt artificial intelligence, their demand for Nvidia's specialized AI chips will substantially increase, and Nvidia is set to profit greatly from this, especially as it gets ready to launch its most powerful chips for AI, the Blackwell GPUs. Now, we don't have an official release date for them, but we might have a better idea on when Nvidia's Blackwell chips will be released. According to UBS analyst Timothy Arcuri, the Blackwell chips could start shipping in December, which is a little later than UBS' original assumption of October, with test timelines suggesting late November or December as more likely. That means Nvidia could have a patch of slower growth in the October quarter, but that's not a reason to worry about the chipmaker, according to the Analyst, because demand for its flagship H100s remains strong. Arcuri maintained a buy rating on the stock and raised his target price to $1,150 from $1,100. For Nvidia, the future looks as bright as it can be. That's the resounding verdict from analysts Ben Reitzes and Timothy Arcuri after their deep dive into Nvidia's operations. Cloud giants are locked in an innovation sprint, and Nvidia looks set to provide the high-octane fuel. As the industry charges full speed ahead into an AI-powered tomorrow, Nvidia is prepared to benefit thanks to its specialized GPUs. With the likes of Amazon and Google doubling down on AI to stay ahead of the competition, demand for Nvidia's chips is soaring. So, for investors scanning the horizon for compelling opportunities, analysts shine a spotlight squarely on Nvidia. The company looks prepared for the AI obsession, grits the tech titans and cloud infrastructure. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.